here we go. I talk about buying that right on the open, selling that right up at the top. Didn't get down in the lower area. You got 4.5 million shares traded on Qualcomm in less than 3 minutes. That means that it's a high volume stock. The ranges are quite different, so that new MMTs or even the older MMTs need to understand that these are only going to have a certain range bound to them. Okay? Bottom line. One of the things that I was featuring was about stealing this bid over here that just hit 280. Damn it. That's that 370 put that expires and it's already up. At what price level? Okay, well, when it was coming down, you maybe should have gotten out of the way. So limit out and limit back in because you're not reversing on the stock yet. So limit out and limit back in. Limit back in at the lower level until the stock says it wants to roll over. It's 85,000 shares. These ain't going to populate a lot. But when you got a wide bid and ask, yeah, they close at 890, but they took the premium down there to 280. That's what they did. And getting out of the way and getting the lower price is what people do here in this business, the business I run. So limiting out, I'm going to put another limit order in case they want to shoot it up on that light volume. Once it does get its swing high in, it's been 4 minutes, I'm going to bid this contract now at $1.80, everybody. Put it out there. And watch the resistances come back up toward the high. And when it makes that swing high, there will be a $10 rollover from the initial swing high. In the beta structure says about $10, maybe it's 8.5 to 10 from the swing high of 369.98 appears to be that. I'm going to steal this bid. They closed it. Look at how they stole the premium from the public. See, this is what they steal from people based on this kind of a stock. Why? Number one, here's the name. Because of that low volume hook, they just walk away over here. That's why when I say limit out and get back below it, because obviously 890 is a close and I say 470, that's taking 100% out. They took more than 100% out. And they continue to bring the stock right up to the neckline. Still down. Now they're dropping the bids. You got 370.48. Now, this could be the high reversal on CMG. Here's what I'm talking about. He shot that 3-minute bar. There it is. 1 teeny, 2 teeny, 3 teeny. That's a 4 teeny drop in the bar right here on that 3-minute. Here's that spike that I talk about. Then the $10 reversal. We're going to see if it comes into play on the intraday short up there at that high. Then stealing these down here at $1.70 bid. Thank you very much, sir. VIX at 100. That means that fear indicator is getting in there. So let's take a look at this super spike. And let's take a look at how they took $8.90 to $2 with a high of $5.58 and odd bids down there at $1.70. But now these bids are going to run rampant to the high based on that reversal right here on that CMG. The lesson learned for the public is how they marked it from $8.90 to $2 and a high of $5.58 to $2. This side of the market's going to pay. Why? Because you can see right here, my friends, on that super CMG short reversal, manipulate it. Like I said, the qualifier is, though, that the wick goes 1 teeny, 2 teeny, 3 teeny, 4 teeny, 5 teeny, 6 teeny, 7 teeny, 8 teeny reversal in the 6 opening bar. Let it be known that once again, mastering the art mastering the entry, mastering the manipulation, mastering how they're going to mark down and steal from the public is your actual entry. And then you sell it back to them. And learning that they took that much premium out and you got that reversal, you got that move on a 3, 6, 9, option alert, $2, 440, 100% gain, option alert. One trade pays for the year. How do you like that? How do you like that short? How do you like that high beta type of movement? And then how do you like the confirmation is when they slide that bid and they slide that bid. That's how they do it. You had a 373 on a high right here. 366 to there. 370.41, you're below it. This is why I said in pre-market, you will learn how to deal with that opening bell. Option alert service, 2012, 370 put has been in play, and 890 marked down to $2 to the entry, to the glory of the exit. Wholesale bids, $1.70 was below, low 280, undercut $2, 558 high, full-blown option alert service, full-blown option entry alert. That's going to conclude how to trade the opening bell on a high beta stock that reported earnings. Shot that bid, like I said, shot the bid and had the reversal, and that is the truth of trading a 12-minute opening bell.